Today we are going to be talking about what are the 5 areas of personal finance. Understanding these 5 areas is essential for anyone that wants to create financial security for themselves or even financial freedom. All right, first off, what is personal finance? Personal finance is the management of an individual's finances and how they make, spend, save, and invest their money. So let's talk about these 5 different areas of personal finance so that you can improve your own personal finances. Areas 1 and 2 are definitely essential. And then number 3 is my personal favorite. And then number 4 can really hold us back if we are not careful. And then number 5 is the one that helps us ultimately achieve our financial goals. So let's dive in. Area number 1 is setting up our own spending plan, also known as a budget, but I think that sounds a little boring, so we are going to call it a spending plan so that we can have a plan on where to spend our money. This will allow us to not only track our finances, but also improve our finances, because what gets tracked gets measured and gets improved if we are doing it correctly. We want to set up our spending plan so that we can see all of our income and all of our expenses and then see what our net income is. We want to be spending less than we are making. And there are a lot of different ways to set up your spending plan. The way I like to do this is through using a Google Sheet so that I have access to it no matter where I am, because I can access it not only on my computer, but also on my phone. And then I like to pair that with a free app. It's called Empower. It used to be called Personal Capital. But I can hook all of my financial accounts into Empower, and that way I can see everything in one place. But not only that, I can export all of my transactions into my Google Sheet, so I'm not typing out every single expense or income into my Google Sheet. I'm just exporting those transactions directly to my Google Sheet, and then I can manipulate that data however I want to. But honestly, I check Empower pretty much every day, just for a few seconds, so that I can make sure things are on track with my finances. If that's something you're interested in, I will leave my referral link below in the description. You can click on that link and set up a free account with Empower. Once we have a good idea of our entire financial picture, we want to move to the next step and focus on saving. This is the second area of personal finance. We want to have a certain amount of money set aside for emergencies or even something that we are working toward. This could include saving up for a down payment on a property, or taking a trip to Paris, or even buying a car. Once we can establish this habit of saving, then we are able to move to the next area. But before we move to the next area, let's talk a little bit more about saving. I've always been really good at saving my money, and later I turned more from saver to investor. But one thing that helped me save my money so well is to automate my savings. And I also paid myself first. I paid God and myself first. So I paid my tithing and I set money aside for my savings. By doing that very first, I was able to pay myself and then pay everyone else. For example, all of my different bills. If we can get into the habit of paying ourselves first, that is going to make a huge difference in our finances. And I know I've shared this experience before, but you may not have heard it yet if you've not watched all of my videos. I was giving a presentation and I mentioned to automate your savings. So just set up an auto transfer every 2 weeks or every month, depending on your circumstances. But set up an auto transfer from your checking directly to your savings so that you didn't have to think about it. And I had one of my friends come up after the presentation and tell me that she was going to do that immediately. And then months later, I got a text from her and she said she had so much money in her savings account and she knows there was no way that was actually going to be in her savings if she did not automate that. So that is an easy way to become a really good saver. Just automate the process. Comment below and tell me if you have set up an auto transfer from your checking to your savings. And another way to make saving easier is that if you are saving up for something fun, then you can create a savings bucket for that and name it whatever the fun thing is. For example, I like using Ally for my savings account, and they have different buckets inside of their savings account. You can allocate a certain amount to each bucket. So if you are saving up for a trip to Italy, you can name that bucket Italy, and you'll be more excited to save your money because you know what it's going towards. All right, now let's get into area number 3, which is my personal favorite, and this is investing. We want to make our money work for us so that we can stop working for the money. Investing, of course, means putting our money into some asset that is going to make our money work for us. This can include real estate, stocks, bonds, or even a business. There are a number of different assets we could purchase to make our money work for us. And of course, investing can be risky, but we can mitigate that risk if we know what we are investing in. And we can also realize that we need to take some sort of risk in order to get higher returns. We cannot just leave our money sitting in a savings account and expect to get high enough returns to live off of that money during our retirement years, especially if we want to retire early. To get started investing, we want to research different investments out there and decide what would be best for us. If you are interested in investing in the stock market, I have a free masterclass. I will leave a link below in the description. You can click on that and check out the free masterclass on how to get started in the stock market very, very simply. I know when I was getting started investing, I was feeling a little bit intimidated, especially with real estate and the stock market. But I am so glad that I learned about both of those investment vehicles and invested in both of them, because that helped me become financially free. And I try not to have regrets, but if I did have a regret, it would be not starting sooner, not getting my money working for me even sooner than I did. And I realize a lot of people are nervous about investing in the stock market, especially right now, where things are down, depending on when you're watching this video. But we can do a little bit of research and understand how the stock market works and choose investments that are going to be good investments over the long term. Keep that long-term perspective, and we are going to be very successful with our investments. All right, let's move to area number 4 of the 5 areas of personal finance. And this one is debt management. We want to make sure that we are managing our debt properly and not getting into more and more bad debt. Because if we don't do this properly, this can really hold us back from building our wealth. Debt can be a significant burden on our finances and can hold us back from creating that financial freedom, especially if we are so focused on our debt and feeling really bad about that debt and not actually making a plan to pay off the debt. If you do have high interest debt, you definitely want to pay that off as quickly as you can. We want to make sure that when we are paying off this high interest debt, that we are not going into even more debt. We want to pay it off and then not accumulate more high interest debt. There are 2 main ways to pay off debt. One of them is the snowball method. This is where you list out all of your debts and you have the interest rate next to them and you have the balance next to them, and you pick the one with the smallest balance and pay that off first, and then you move that payment to the next largest debt and pay that one off, and then you continue on until you pay off all of your debts. This one is a nice way to pay off debt because it gives you that quick win. The other method is the avalanche method, and this is where you list all of your debts again, but you start with the highest interest rate debt first, pay that one off, and then move to the next highest interest debt, pay that one off, and then move down. With this one, you are going to pay the least amount in interest, but it may not give you that boost you need to continue moving forward. Because with the snowball method, you can see that quick win. You can get that one balance paid off very quickly, and that helps motivate you to pay off the next debt. Because as we know, personal finance is a lot more personal than just finance. So choose the method that is going to work the best for you, that is going to help you pay off your debt. And if you do want more information about that, I do have another video breaking this down into more detail. I will leave a link above. You can check that out later on. To give you a personal example, when I was trying to decide which mortgage I wanted to pay off first, it would have been really easy for me to go with the smaller balance and pay that off. But I ended up choosing the larger balance and paying that one off. And I'm really glad I did that because that mortgage also had the highest payment every single month. But it is entirely up to you which way you want to do it. And then area number 5 of the 5 areas of personal finance is retirement planning. This is the one that is going to help us achieve our ultimate goal of financial freedom. Retirement planning is just setting up a plan that is going to help you get through the time when you are not working. This involves setting up a plan to help you support yourself financially without having to work. A lot of people put off retirement planning until it is too late. We need to be focusing on this right now so that we are not so worried about even being able to retire in our 60s or even our 70s. The earlier we can start investing our money and planning for retirement, then the earlier we are going to be able to retire. And let's look at a quick graph here. If we are investing $1,000 a month and we get a 10% return, and we do this for 30 years, then we are going to have over $2.4 million invested. And we can see all of that green on the chart. That is compound interest. That is money that we did not put into the account. We put in all of that blue part, which is significantly less than the green. So if we can invest our money even earlier, we are going to take advantage of compound interest. To figure out our retirement plan, we need to figure out exactly how much money we're going to need to retire. A simple way to do this is to take our expenses, our annual expenses, and multiply that by the number 25. That is the amount that we need to have invested in order to be able to retire. For example, if our annual expenses are $40,000, we multiply that by the number 25, we are going to get $1 million. We would need $1 million invested in order to retire. And if you want to know a little bit more about why I've chosen to multiply our expenses by the number 25, I have another video breaking that down. I will leave a link above. Make sure you are contributing where you can, whether that is a 401k or if you have your own business that you've set up your investment accounts and you are investing money in the stock market so it can build over time. And if you do want help with that, like I mentioned before, you can click on the link in the description for my free masterclass. If you found this video helpful, please hit that like button and share it with someone else who would like to hear this information, and hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.